My name is Andreas Borg. I'm General Manager in Investor Relations. I work for Shell, an integrated oil and gas company, or an energy company, as we call us today, because we are an active part of both delivering the energy the world is using today, but also being part of the solutions in terms of low carbon energy for the future.
Right. Well, I think that answers my first question, which was, what is Shell today? It's evolved over the years to kind of get to this point. Ultimately, people do think you still as oil and gas company, but there's more to it. I mean, what else do we need to be looking at in terms of the structure and nature of the business?
Now, if you want to make it simple, then you can say we are three things. First of all, we are a leading LNG company in the world, and LNG is used in power and industry. Some of the use you cannot replace in terms of electrifying because of the intensity of energy that is needed in those processes, for example, when you're manufacturing steel or concrete. Secondly, we are an oil business. We produce oil, we refine oil, and we sell oil, or oil products, I should say. And the oil products we're selling is in transport. So we are a market leader of selling oil products globally into light vehicles, into trucks, into aviation, and into marine. And thirdly, we are selling significant electrons in terms of terawatt hours. So we are selling power. And in power, we are predominantly a trading house, and we are a leading gas to power marketer in key regions in the world: North America, Northwest Europe, Australia, etc. So that is what Shell is about. When we then talk about energy transition, then in the power section, it clearly electrification through renewables is an opportunity, and we will play a role in that. When we talk about energy transition in transport, then we see it in light vehicles in terms of EVs. We see it to some degree in aviation, where regulation in terms of biofuel starts to happen. We see it in traditional petrol and diesel, where biofuels is again regulated, blended into the products that a lot of people buy on a daily basis. And we see it in shipping in terms of using LNG. And by doing that, instead of using heavy fuel oil, you can reduce the emissions. And then, of course, we see it in our own operation and how we operate. We reduce our scope 1 and 2 emissions, our own emissions, and we have a plan to reduce that by 50% from 2016 to 2030. We have reduced our methane emissions by 71%. We have reduced routine flaring by 91%. And both these figures since 2016. So we are an active part of the energy transition, and we are very bullish. The last one is LNG. We are very bullish on LNG. We believe LNG is a fantastic transition fuel and will continue to play an increasing role in the energy system. And we are keen to continue to provide and growing that LNG business.
Right. And there's been obviously a lot of talk about energy transition for the past few years, and greenification, the ESG component, best practices, as you've outlined a couple of them, which is all great. But there's a kind of commercial imperative to running businesses as well. So you have done the work on understanding the economics of all of these revenue streams. What is the continued focus going to be? Are you looking at LNG to deliver against that kind of green message?
Yeah, I think we have been through a journey like anybody else in terms of energy transition and what does that mean to us. And I think that the key is where do we have competitive advantages? Where can we actually invest with decent returns and make a difference, and try to avoid that we start to invest into areas where we don't have that competitive advantage and therefore will see disappointing returns. So in practice, what does that mean? Indeed, LNG is something we continue to invest in. But else it means that, our oil business, as I mentioned, is predominant in transport. So they are biofuels. We are leading, if not the biggest biofuel blender in the world. And we have the supply network, the tanks, the depots to do that. So we have competitive advantages there, and we'll continue to grow that. EV charging, we have our forecourts, and we can make thousands of small investments in terms of adding EV chargers on our forecourts. Hydrogen, at some point, we believe that hydrogen is something we're using at our refineries today. We're investing into some of the biggest hydrogen plants in the world, and we're building them right now. The biggest in Europe is being built in Rotterdam today. CCS, capturing and storing CO2. It used to be called enhanced oil recovery. It's a technology that we and our peers have been part of. So that is areas that lies naturally close to our existing businesses. And then we shouldn't forget that, to some degree, Shell is a trading house with a large upstream component and a trading house with a large downstream component. But we do have unique capabilities in trading optimization, partly because of all the infrastructure we have in terms of depots, pipelines, ships, etc. And with an energy transition, we see a more differentiated energy mix in the next 30 years, uncomparable to anything we've seen before, probably uncomparable to anything we will see after that period. And that trading opportunity gives us a unique advantage over the next 3 decades.
Well, I imagine the data that they have access, the traders have access to via the rest of the organization, must give them a bit of an edge, I suspect. Can I? So I just want to sort of stick with the kind of the commercial, the economics a bit. You say that you feel that the next sort of 20, 30 years will look very different in terms of that energy makeup. What do you see it moving more towards, sort of globally, to maybe even outside of Shell, where you can retain that kind of competitive edge?
Yeah, a large component will be an electrification. And you see that, as we discussed in transport as an example, but you see it in other areas. You see more, especially solar, but also more wind into power. With that, LNG is a fantastic backup fuel to that. It's not only, the days where there's no wind and it's overcasted. It's far more seasonal, actually, that you have periods. Think about solar panels in the European winter. It's not that useful. But you also have a lot of seasonality in terms of wind across the world. So we believe LNG there becomes a very important component. But the electrification is clearly one, and more renewables into power is the start of that. If we look at the transport sector, specifically on light vehicles, EV is coming. It's furthest advanced in China, second most advanced in Northwest Europe, haven't really started in US or in the rest of the world.
Right.
If you talk about just trucks, I think slightly more open play. Is it possible to electrify trucks 10 years behind light vehicles? Maybe the alternative is LNG or hydrogen. If you talk about marine, the only thing you can do today is probably LNG or simply sailing with lower speed. And if you look at aviation, then it's biofuels, and there is no real alternative in the next 2 decades, 3 decades.
Yeah, okay. It kind of feels like some uncertainty around the sort of, the larger applications, like say, like trucks or shipping, because the energy requirements are going to be vast, and I'm not quite sure the infrastructure is there for that. Maybe it's another conversation for another day. Just on stock, obviously, you've had a fantastic run since the kind of the crash of March 2020 due to COVID. You've had an amazing run back up to the heights that you saw in 16, 17, 17, 18 and 19. Do you put that down to just the market recovery that's gone, that's happened with on most exchanges for the larger, cash producing companies? Or do you put it down to actually a sort of a clarity as to, what the company is and what it's going to be going forward?
Yeah, there are two components, and they are widely different. There is the macro component, large economic growth post-COVID, some geopolitical issues and crises, Russia's invasion into Ukraine, Red Sea, etc., Middle East right now. That part you can track us and the sector, and you can see that we have all trended upwards. What is more interesting to us is our relative performance towards our peers, and there I think we're coming into this second component, and that is around we have not been a good capital allocator for a couple of decades. We are an organization that have not been in top form. We have had a new CEO coming in 1st of January 2023, so 19, 20 months ago. And he have outlined that priority to shareholders is key to him. He have laid out that capital discipline is something he wants to be known for. And he do that in 3 words. He talks about performance, discipline, simplification. Performance, 2 things: asset performance and return to shareholders. Discipline, 2 things: the capital allocation that I talked about, but also to be very good at keeping promises. Deliver what you say you would deliver, instead of being an Olympic champion and explaining why it didn't happen. And simplification is around tail end portfolio management and also simplification of the organization. Now we realize that it's very rare that a new CEO is coming in and say, I don't like performance, and this company is too disciplined, and we are far too simple, so I will make it more complex. So the idea of performance, discipline, simplification is not new for a new CEO coming in. So to add credibility, we created a first sprint concept, while Savannah, our CEO, created a first sprint concept, and essentially allowed himself 10 quarters to deliver on this. With that, we have seen that we start to narrow the valuation gap to our peers. So that's the second component. So we are also becoming in better shape. And to that, we can then talk about what does that mean from a ESG energy transition point of view. And there, I think we came from a period where we tried to please all stakeholders. And with that, there was probably a little bit of gaps between the narrative when you talk to various stakeholders. And that meant that we, over time, probably confused stakeholders around where we were going. And we probably lost some trust. And we have sharpened that. So there is now no difference when we talk about delivering more value. Typical capital market day narrative around distribution to shareholders, around capital allocation into the businesses. And when we are talking about delivering less emissions, so what is our role of the energy transition? It's now one strategy. It's the same strategy to all stakeholders, and we believe we can deliver more value with less emissions.
Right. Yeah. I guess with big companies like yourself, people stop worrying about the actual, well, usually stop worrying about the deliverables of specific assets, and it's more about the quarterly numbers. Are you hitting guidance or not? It's kind of really simple. Return on capital invested, growth, all of these kind of buzzwords, which I think a lot of big companies forget to talk about sometimes. You guys are very much honing in and focusing on that. It's clear. But can I talk to you about the sort of relationship between that kind of commercial imperative and the ESG component, right? Where there's I think when I speak to a friend of mine at BlackRock, I think 3 years ago, ESG coming in as a sort of mandate across all product lines for these funds. It was very, of the moment. And I think it's slightly worn a bit thin, and people perhaps don't like talking about it so much now. How is Shell coming at that now, given it's, coming from the history it has done within the oil and gas space, which has had a lot of pressure on it to behave and conform to certain expectations in different parts of the world. How's that ESG relationship with the kind of commercial imperative working?
Yeah, it cannot be a dilemma for us. We need to participate in the energy transition where it makes commercial sense and where we see opportunities to grow our businesses, and where we see a decent return on the capital we put into these solutions. So the idea of, because it's energy transition, we have an obligation to participate, irrespectively of returns, we think is fraud or flawed. That logic simply does not work. And if we put our shareholders' money into bad projects with limited returns, in the end it will also not create appetite for others to follow, and therefore it will actually slow down the pace of the energy transition, because people will look at our poor performance, our valuation gap to peers that are not doing the same, and they say, okay, that is not the way we want to go. So instead, it needs to be looking for opportunities where we have competitive advantages, where we can make decent returns, where we see a customer demand, and therefore we can put our shareholders' good money into that, and we can deliver decent returns, and that's what we're doing now. So we believe we can deliver more value with less emissions, and we are out of that dilemma. Yeah, but you need to do it now. When we look back, we have on our balance sheet around $20 billion in renewables and energy solutions today. It delivers on a quarterly basis close to nil in terms of profitability. There is some trading components that helps on that, but it's clear that the return on capital employed is so far disappointing. It's interesting that the market can view that in two ways. You can either say, okay, Shell have put some money into being ready for the energy transition. They are therefore better prepared than our US peers, and that should have a value. Or the market can look at the numbers and say, Shell is not a very good capital allocator. We are not sure that putting our money into Shell give us the right return longer term, and therefore it deserves a discount. And what we've seen today is the latter, and therefore we cannot just continue to put shareholders' good money into something that delivers low return, and that adjustment have taken place.
But is it a case of, that's the cost of doing business in this new environment, this energy transition environment, and we just have to suck it up? Or do you have to say that we've got to find a better way? And if that's, maybe there's got to be some price incentive from whoever your customers are, or whichever governments are involved with this one. Can you play it that way, or is it say, well, if it continues to be like that, we're not being given the value that we want, it's not good allocation of capital, perhaps we drop that? Can you afford to do that?
Of course, we need to. If it doesn't give a decent return, you need to drop it. That's our duty towards the owners of Shell. But I think what you said before that, can we look at where are the opportunities? Can we look at where are the policymakers creating the right incentive? Can we look at in what areas do we see demand emerging, and can we play smart into that and get a decent return? That is also true. So what does all of that mean? That means that if we look at our power business, then we are looking very much at an asset-light business. We don't need to hold the gigawatts. There are many other players with a lower cost of capital that are willing to hold and own wind farms and solar farms. But we need to have access to that power, that renewable power. We can trade around it. We can deliver to customers in the B2B segment. And that can give a good returns because we can use our trading knowledge and data from the gas to power sales. So there it makes sense. In transport, it can make sense because we today are the biggest blender of biofuels. So more regulation in terms of biofuels being blended into traditional oil products, whether that's in diesel or petrol or probably going forward more and more into jet fuels using SAF, we can play a role there and we can trade around that. And we have the infrastructure to continue to be one of the biggest players in that area. So it's around what is our strength? How can we use that strength? And in what markets do we see that the energy transition is progressing at pace? And then, be a partner in those areas and make a decent return from that. Another example, EV charging. In China, it's going much faster than in the rest of the world. So we are investing into EV charging in China. In Europe, we are putting EV chargers into our mobility network, and we can monitor the utilization rates. So when we see that the utilization is 15, 20% on a charger, you put in the next charger and the next charger. But we don't put in chargers in our entire US network when the utilization is very low because the EV penetration is still very low. So you can see how across countries, political areas, different incentives, we need to play smarter. But we need to play smart in areas where we have a competitive advantage. In the EV charging, that is our existing network.
Right. And what about the rest of the organization with the rest of the product? I mean, you're talking about taking opportunities. You're a global player, obviously, big company, lots of product lines, lots of business customers in there globally. You don't play it the same way across all geographies. The geopolitics of what's going on at the moment, as you say, whether it be European energy issues, for the past 2-3 years, versus attitudes in Asia, attitudes in the US. So are you able to kind of turn the volume up in some parts of the world and turn that down elsewhere? I mean, how do you manage all of that as a global company?
Yeah, three things comes to mind, Matthew. First of all, when you look at what is happening within our own gates, then it's very, very similar across the world. When we look at reducing our Scope 1 and 2 emissions, so the emissions from our own operation, and don't forget we are a heavy industry in refinery, in chemicals, in LNG, when you cool down gas to minus 161 degrees Celsius to get it liquid, to sail it off. There we are a heavy industry. And that's where most of our Scope 1 and 2 emissions, or our own emissions, are coming from. And we have said we will reduce that by 50% between 2060 and 2030. When it comes to routine flaring, we have said that will end by end of next year globally. When it comes to methane emissions, we have reduced that 71% globally. So there, it's global. When it comes to lobbying, so what are we advocating for towards policymakers? That's global. We want to see the world meet net zero by 2050. We know it's challenging, but we need to keep pushing for that. And our lobbying there is global. When it then comes to utilize policies put in place by policymakers, when it comes to analyzing customer demands and the opportunities that creates in terms of the pace of the energy transition, you're right, that becomes more regional.
Okay. Let me ask about this energy transition phrase, and this energy mix is really where I'm going with this one. I think lots of companies and lots of countries using the phrase energy transition as we move to more, electrification of, everything. It seems. If I look at, Shell, I think I know where the money's being made, and I can sort of see where perhaps it's it's not working as well from an investor point of view, from a logic point of view. I also got to ask the question of what is the right energy transition mix here. It's not a case of instead of, it's a case of as well. Is that your attitude to the energy supply and energy mix that you guys will be focusing on going forward?
Yeah, and I think that's true for the energy system as well. So that's just not us. Yes, there will be a significant electrification. You cannot electrify everything. And when you're talking electrification and power, then the power needs to be generated for something. And there's only so much in place, and there's only so much infrastructure in place to be able to use wind and solar for that for a very long time. So it has to be an and in an energy system that is significant growing. Asia is currently going through that soft S where they start to want to live this life standard we know in Western Europe. In many parts, they want to go on the first holiday by plane. They would like to have their air condition. They would like to have their first car. So we need to understand that the energy system overall is growing. Electrification is part of the answer, but you cannot electrify steel plant or concrete plants very efficiently today. So there is a significant role to be played for oil, for LNG, for nuclear if you want. And we are not in nuclear, just to ensure that I don't create a speculation here. So it has to be an and for Shell it's also an and.
Okay, good. It's just sometimes there's very distinct groups of it's renewables or nothing, and others that say, well, actually, you cannot remove oil and gas as part of the mix. Because obviously we just don't have the infrastructure. We can't sort of step change overnight into an oil-free environment. Can I come back to the from an investor point of view, and I'll probably finish up here because I appreciate the time you've given me today. If I'm and you've touched on it a couple of times during the conversation, but you've had a good 4-year run back up to those levels I mentioned, 17, 18, 19. Where do you think the growth is going to come from? You said you're not maybe getting the values that you think you should, possibly because of some of the renewable component that you're looking at. You're not quite, you're performing, well, I don't know how you want to say you're performing in relation to your peers, but there's a big, wide world of investing possibilities out there. Why should people be investing into Shell? Where's this growth and share price appreciation going to come from?
Yeah, before I go there, Anna, it's a very good question to end on, Matthew. I just want to go back to that discussion on the energy system and what people believe in and not believe in. We have a trilemma here in terms of energy security, energy affordability, and then the energy related emissions. And that's what we need to deal with. And that's where also we think it's important that we are leading in terms of reducing our own emissions, and we welcome all other sectors to do the same. How many sectors can you mention that reduce their scope 1 and 2 emissions by 50% between 2016 and 2030? It's very, very few. But there is a level of naivety in the debate around how quickly that massive energy system can change when we at the same time don't want to see significant higher energy cost. And we have, recently in Europe experienced the negative cost of living consequences when you suddenly don't have energy security. So it is just much more complex than people want it to be. Now and then to your final question, and thank you for allowing me to leave with that. Shell Next, I think in the short term, it's very clear that we need to get the company in top form. It's very clear that it's not in top form. And that's around performance, discipline, simplification. It's around delivering the assets. It's around distributing to shareholders. It's about being a good capital allocator. It's around few targets that you deliver on every time. And it's around tidying up both the organization and the portfolio. And there is significant value upside in that. That allows us to grow in terms of free cash flow. It allows us to grow in terms of free cash flow per share because we also have a very significant share buyback program. Now that will continue after the first sprint. And there's, as I said, just a very significant value upside in that. Now then beyond that, where's the growth coming from? The growth is coming from LNG. And so we see significant opportunities in that. And the growth is coming from, continue to optimize the integration in terms of the flows through trading, whether that's in terawatt hours, whether it's biofuels, whether it's in oil products. How can we integrate that trading and optimization? And as I said, because the energy mix is getting more diverse in the world, we see a significant upside there. Now that is kind of the short-term, medium-term opportunities for the company right now, and that is all possible in terms of self-help. So that is where the focus is right now. We will then have a capital market day next year, and there we can start talking a little bit about what is then coming beyond that. But for now, you should not underestimate, Matthew, the value opportunity that we have in our own control in terms of how we operate on a day-to-day basis.
Andreas Borg, I thank you for your time today. Lovely to hear from you.
No, thank you very much for having me, Matthew.